That's why you got this big old thing in there. So this is.
Hey, sorry about that, everyone. We're going to get started here in a second and pick up where we left off. Before the left. Okay, yeah, we're up. We're good. Good? Yep. Got the link? Yep. Sweet. All right, so obviously we left off overall markets, small cap, gets rid of the scan, certain things I'm looking for. So at this point, it's about adding up the pros and cons, okay? Adding up the similarities that I can find between stocks in the scan and what I know to be running up at the moment, okay? At any given moment. And that's what I'm going to do. I'm going to go through my scan, all right? If it's a $5 biotech that ran a 10 yesterday, all I'm looking for are $4 to $6 biotechs with similar floats, phase news, anything I can do. The more similar I can make them, the more similarities there are, the higher likelihood that that's the sympathy and that's going to be the runner that day. Does that make sense? Really basic. I don't overcomplicate it. So if I have a bunch of these similarities, the more I can add on, the greater the conviction, The greater the conviction, the higher likelihood I'm going to take a trade, the more size I'm going to have, the more I'm willing to risk, in other words. If I get to a scan and there were a bunch of runners yesterday, but there's nothing on the scan that matches anything, then it's not. Then I kind of pump the brakes. I don't know. I don't know that if it's going to be a sympathy or not, That's the idea. When I'm looking for sympathies, the more similar they are, the more conviction I'm going to have in trying to give it a shot and find some risk reward. If not, then no, okay? If the answer is yes, if the answer is no, then I'm likely not going to trade it, but either way, the next move is to get to the daily chart, okay? Oh, that's not nice. All right. Next stop, daily chart. All right. Get to the daily. All I'm looking for when I go to the daily is there room for this thing to run? What else can the daily tell me? All right. The daily is a really big thing because, like we kind of have been going through daily charts together, it tells me a lot. Okay? If I see gap downs recently, that's kind of the first thing I'm looking for. Gap downs. Has it gapped down recently? All right? If the answer is no, that's a pretty good thing. All right? Gap downs are either offerings or they are bad news. Okay? So the answer is no, good. If the answer is yes, bad. Red flag. All right? If the answer is yes, if there have been recent gap downs, it's a red flag. Right? Pump the brakes. If the answer is yes, it brings me to the filings. Okay? If the answer is no, right now, it still brings me to the filings. Okay? In 2021, yes or no gap downs, I would still look at the filings, but I just didn't put much weight into this. And if there were no gap downs, I wouldn't even look a lot of the time. That's just how it was during that period of time. Now it's yes, okay? If there are gap downs, it's because it's either an offering or bad news. If yes, filings or news as well. I'll check the news. If I don't find an offering in the filings or go to dilutiontracker.com, I'll check out the news because maybe it's bad news that I need to know about.
Can't see anything.
You can't see green?
Can't see shit.
Thank you. Clear enough, right? Gap downs, right? Gap downs, I'm looking for reverse splits. Okay, reverse splits, we all know about that. I talk about it all the time. Have they done a split lately? Changes the dynamic of that stock, okay? Have they done splits? Have they had gap downs? Have they had recent runs? With volume in particular, all right? Did it spike recently? Did it go parabolic recently? Did it already just go nuts? Okay, if that's the case, if the answer is yes here, if it ran recently, pump the brakes, all right? That's a con. Recent run, generally speaking to me, means bag holders, retail's been trapped already, okay? Backside of the move, probably dilution's been triggered. If it hasn't, warrants have been triggered. And generally speaking, you get backside and they're just gonna kind of perpetually dump into these things, especially if they're dilutive, okay? So if they've ran recently with volume, they have new resistance levels. It's just not going to be able to run as freely as something that is new and catching shorts off guard and squeezing on a day one, okay? So if the answer is no, that's a pro to me. That's a pro to me, all right? If it hasn't ran recently, that means there's probably no recent bag holders, you know? It doesn't give shorts a reason, you know, when shorts see a parabolic get backside, there are a lot of shorts who make their career off just pounding it every time they pop, because they understand this dynamic too. That once the volume's in and out, that ticker is likely gonna fade for a long time, you know? And any big pops get sold into by the bag holders and all that good stuff. The people dumping shares, etc. All right? Recent split, recent runs with volume, gap downs. That is what I look for on a daily chart. Okay? And then I'm going to map out levels of support and resistance. But either way, after all this, we'll get to the daily chart, right? Any questions on daily chart analysis? I keep it basic, just like everything I do. Don't overcomplicate it for me. There's more that I look for on daily charts. We're not going to get into everything. We don't have enough time, okay? But that's it. Particularly when there are gap downs, next stage for me in this process is filings, or fundamentals. And in this case, what I do these days is I just use dilution tracker, okay? I use dilution tracker, put the ticker in. All I'm doing when I look through the filings is trying to figure out if there is excess supply. If they are going to be dumping, I don't want to be the person being dumped on. Let everyone else get dumped on. This is the idea at least, okay? I'm looking for excess supply. I want to know where it is, all right, or what the price is. So what's the price? Okay? The quantity, how many? How many shares, all right? What's the price? How many shares that they are able to dump? What type of offering, what type of dilution it is, all right? Is it an ATM? Warrants? Convertible shares? Toxic dilution? You know, how are they dumping their shares? What price? How many? What kind of offering is it? I'll generally look who it is because you can see patterns on how different institutional investors end up dumping shares on people, you know? Just the basic questions. Where is it? How many shares do they have to dump? If there are warrants, right? Well, we already put that there. And if they are, what are the exercise prices? That's important. Okay, it may be months down the road. You know, they may have done an offering 6 months ago, maybe 2 years ago, okay? And the stock is going parabolic spiking and you don't even know it, but they're triggering old fucking warrants. And probably by design, you know, they're stoked. They're like, shit, we got to $7 and they have a ton of warrants up there. That's key to know because there may be excess supply. That is all I care about. Where am I going to be running into a brick wall of someone with 1 billion shares, you know? 1 million, 5 million, 20 million shares that they're trying to offload. Where would that be? You know what I mean? Okay? And they tell you. Okay? So just quickly, If it's an ATM at the market offering, prevailing market price, they can just dump kind of anywhere you don't know, all right? So I'm not a big fan of these because I don't like the uncertainty of the fact that I don't know where they're dumping. It's probably on me right now, you know what I mean? On my face, I mean, whatever. Warrants, what are the exercise price? How many could they dump? You know, what are the terms behind the warrants? I love warrants. It gives me a very solid number to use, solid information.
You should also look at the exercise date of those warrants.
Exercise date, everything about it. Everything about the warrants. When can they use them? When do they expire? All that good stuff. But mainly, what's the price? What's the conversion price? How many can they dump, okay? And then convertible preferred shares and stuff like that, those can get really toxic. And we're not gonna get all into that right now. But that's it, all right? So this is gonna dictate stuff too. So if say there's 5 million warrants exercisable at $5 and the stock is trading at $4.75, I'm much more likely to not trade it. Because I try to look at that exercise price as the top. Does that make sense? Not all the time. There are times where I'm trading into warrants. I know it. But most of the time, you're better off not. When you have this information at your disposal, when you know there's excess supply, why do I want to be long? It goes back to that concept of being a contrarian, fitting in, getting into that flow with the short sellers, buying where they're covering, selling where they're short selling, and then maybe having a piece for when they squeeze. That whole dynamic, that whole dynamic comes into play. And this is a big part of that dynamic for me. Anytime I can avoid situations with excess supply, it's a good thing. Excess supply bad. You know what I mean? So that's what I do, all right? If I'm in the realm of anything that can be harmful, then pump the brakes. If it's super dilutive, pump the brakes. If there's an ATM, pump the brakes. That's how I do it. That's how I do it. If they're not, it's clean. Okay? If they're not, it's clean. That's a pro. I call it clean. That being said, clean can turn into not clean like that. You know what I mean? So I always look at it like that too. If there's someone that isn't diluting, like there's something wrong with that company, and if they're now going to run, in my eyes, it's always highly likely that they are going to be dilutive after their run. You know what I mean? Which comes back to that principle I talked about during daily chart analysis, where I am not trying to play stocks that just recently spiked. Because most of the time when they spike, it's by design to get retail sucked in, we buy it, they dump on us. It's all design. You have to understand and abide by those laws of our mark of small cap. We're pawns. People with big money dump on us. You don't have to be the us who is being dumped on. You know what I mean? Unless you're electing to, which I do sometimes. I'll trade dilutive stocks sometimes. All right? Any questions? There's a lot more to it, but in a nutshell, that's what I'm doing. And with dilution tracker now, I don't have to read a bunch of legal mumbo jumbo. Okay? Filings, and then we get to the trade. That's it. Then we get to intraday chart, right? Which I'll pull up immediately too. When I pull these tickers up and I start doing process, I have my intraday up, I got my 1 minute up, I've got my daily chart up, got dilution tracker up, and I put them together, and I just put this piece together for each ticker. I break each ticker down like that. Intraday, then we get to the good stuff, I will get to this intraday after I've gone through process, gone through the filings, weighed the markets, weighed small cap, weighed the patterns. I will have a set level of a certain preconceived level of conviction. And if I get to my scan and see something that I really like, that matches what I want to see and need to see, that I know to be running, conviction goes up more. And then if the filings are clean, conviction goes up more. That's how that works for me. It's not like an exact formula. It's an art to me of putting the pieces together, pieces of the pie together, and then taking action, which is next. This is the whole, now we get to like execution, okay? So when I get to the intraday, I'm gonna be looking for range and gappers most of the time. If we're talking about, first green day. So what date is it? All that stuff. That's obviously daily chart analysis, but Generally speaking, I'm trading mostly first green days, and I want to see range. I want to see something that's gapping, okay? So intraday, I want to see a gap. And then it comes down to risk reward, all right? And game plan. What's the pattern I'm looking for? This goes back to freaking step one again. What is running, always? What am I looking for on the intraday? How do I want it to set up? What does it look like now? How can I picture it setting up based on all the information I already have? I start playing that game, all right? But at the end of the day, all that matters is this to me. My RR, my risk reward, and finding the best spot for me to buy the worst stocks. And to me, the best spot to buy the worst stocks is as low as I possibly can, right? So, intraday. 1 minute chart in particular, I'll watch pre-market, okay? I don't really like to trade pre-market. I don't. But I will sometimes, if there's something opportunistic. In pre-market, I'm looking for a gap, I'm looking for strength. I don't want it to be too parabolic. If it's too parabolic on the intraday chart, I get freaked out. I don't necessarily want to buy the dip in the morning, you know, because there's so much downside. The beauty of what I like to do is find opportunities in the morning where there's strong stocks. I get in them with very little downside. That's very key to me. So I can have little downside. I can be more aggressive. I can have conviction in the fact that if this doesn't work, I'm going to lose 3 cents a share, right? Or $300 on 10,000 shares. Okay? Then if it moves 10 cents, you make a G. If it moves 20 cents, I make 2. So that's kind of how I frame it. But now it's the trade, man. Now it's the trade. How many shares can I get? All right. When we're talking risk reward, which is kind of what we're going to get into next, I'll have patterns I'm kind of looking for. And I love this part, you know, this is where it's like, now I'm getting into my trade psychology because I got to perform, all right? All the rest of it was just was like practice, pretty much, you know, warm up, and now it's trade time. But what's important about trade time was everything else I did before, okay? Everything else, that's what guides me, and I'm always in the ballpark because of what I do before getting to the scan in the first place. Okay. Risk reward, lows. I'm so low centric. I'm just looking for lows. I'm looking for lows when we do gap and crack reversal. Day 2, I'm looking for lows, looking at maybe previous day's highs or previous day's support. Anywhere I can maximize risk reward, all right? So when we get stocks that run, say this is pre-market, so here's like market open. Gotcha. Pre-market. When we get stocks that run and give you a range, pre-market highs, right? Starts to pull out the open like that. That's what I'm looking for. I start breaking it down into sections of the chart and then risk reward within those sections. Where's my single? Where's my double? This is very, very basic, right? So I watch, I'm patient, 10 minutes, maybe third leg down, really little one. Pop up, I get that sort of action, right? Get a low. I get a low, I get a high, right? Pre-market high, let's say we got even a little spike in the high day. High day, pre-market highs, I deem it to be lows, and then it's literally, this is the game to me. That's my range. Where's my risk? What does good risk reward look like? Well, pretty much that. Does that make sense? From a visual perspective. Risk, reward. Back to high day, risk. Right? Does that make sense? That's generally speaking what I need from a visual perspective. I look at range. Here, look. Sorry, this isn't a perfect thing, we don't have good markers. But if this is high day, if this is pre-market highs, I deem this to be lows. I need to get an entry somewhere in this realm so that when it gets to high, I'm 1 to 3, 1 to 4, 1 to 5, 1 to 6, 1 to 7 on my trade. Does that make sense at all? Yeah? So that's the idea, okay? It does this, we cut immediately to maintain that 3 cents I have, 5 cents risk. I don't need 10 cents risk, you know? If you're playing in a 20-cent range or 30-cent range, an extra 5-cent slippage is so much, okay? Am I off because of that? It's all good, I'm about to erase that anyways.
Yeah, just whenever you go to that side, it goes like completely out of focus.
That's fine.
I don't think it is. Yeah, I think
I'll just stay in the middle. We're good.
And you said you buy into the weakness.
Yes.
So indeed.
So from a risk reward standpoint, that's what I do. And that's every setup. I look at whatever my range is, where my target may be, what I think the best risk level is, which to me these days is low a day most of the time. And then how many shares can I take, okay? Then I do simple math. I want to risk $1,000, I got 10 cents risk on 10,000 shares. That's always my baseline. Until I get into this mode, which I'm in right now, which is like protection mode. It's not 10,000 shares. It's like trading like $2, $5 stocks. You know, it'll be much less. So I have that number preconceived based on what the runners are. Take everything into account, my scans, catalyst, all that good stuff. And then this is my long-term game. Risk reward. And my definition of that has changed so much over time. Before it was like 1 to 3. But I can find 1 to 3 on any point in any chart. You know, I can do that. I can be like, well, I'm gonna risk 5 cents here, you know, to make 15 cents. At any point in the chart, you could say I'm risking 1 to 3. But what's the probability? You know, what levels are you using? That makes a big difference. Where are you buying? I mitigate risk through my entries. I mitigate risk by when a stock is doing this, I'm not buying it. Because I always see this. I always see it. I just always see retracement when I see big runs. And I may see it, and it doesn't, and it just keeps on going. That's fine, you know what I mean? But by buying this higher low, you're actually exposing yourself to just more risk. More risk of not just where you want to cut it. You may say, this is your risk, okay? This is my risk. If I'm playing low a day, this is your risk. But in any given scenario, you're stopped out. And it can keep going, it may not go. So what's the probability that my risk is going to hold? If I know it's a low probability setup for me, like I'm doing something stupid, or I'm trading a stupid breakout, then I have to mitigate risk through size. It's not just risk reward for me. Size is a big part of that equation, okay? Anytime my trading is super out of whack, I can usually fix it with size. Less size. That's for me. Anytime my trading gets out of whack, I just decrease my size down to the bare minimum. And then I build confidence. I build confidence again because I don't care about the money. You know, they're not big losses. I'm just going to be trading freely. Right? So I can mitigate risk in many ways. Easiest way is to size down, less risk, right? But again, it's important to me, like, are the levels I'm choosing going to hold? And if those levels break, what are the chances that there's big slippage or a big halt down that you can't get out of? Or if you set a stop that with everyone else, you know, maybe you get something that spikes like this and then literally goes like this till the afternoon. You know what I mean? That's a little exaggeration. But then if you're going to be risking the bottom of consolidation, you have to know that there is a chance that even if you set a stop, you won't get stopped here. You know what I mean? It happened. It's happened to me. Like last year especially, I was getting wacky stops when I was setting hard stops. Does that make sense? Those squigglies? All right. I'm sure I've missed some stuff, but we're trying to get through this quick. Then it's the trade, all right? Place the trade. Have my risk, have my reward. Best case scenario is profit taking, right? That's my best case scenario. We already talked about. I'll give him a little spike and then snap. There we go. We already talked about. Hold on one second. We already talked about what happens if I'm wrong. Okay, if I see this and I'm thinking this is low a day, let's just draw this out real quick. Where'd those other markers go? Do you have that red one? Can you give me that red marker, bro? Thank you. We're gonna wrap this up real fast. All right. Low a day, pre-market highs, high a day, okay? Right? We already determined if it goes through my low, I have to cut it, okay? Already determined if we do that. We'll just map out risk reward on this trade for you too. Gap and crap reversal, right? Low a day risk, okay? Low a day risk, here's your risk. High a day, this is market open here, okay? Market open, here's high a day. Here's hog, here's pre-market hog, okay? Your pre-market high a day. This is how I break it down. And this is why I need 15 minutes in the morning. I need 5 minutes of action. I need 10 minutes of action. Because I need this part. This part's cool. I love this is all good. But volume comes in, you know? That's the whole thing. When you look at these charts, you're like, okay? And this is what I care about here. What happens when real volume comes in? Are they dumping into it? What's going on? Is there volume in the first place when the market opens, right? So we know we cut if we go here. But what happens if we go through, right? Let's keep, if we get what we want, all right? This is always target number 1 for me. And this is always target number 2 for me. I call this a single, not a delta, whatever, doesn't matter. Okay. So we get to high a day. First of all, let's continue this. This is a take profit zone, right? This is a take profit zone. I like to take profits into this area because I know there's a good chance it's going to pull back a high a day. Okay? And if I didn't sell some, there's a good chance it's going back to low a day. That's just kind of how this works for me. That's how I like to look at it to keep myself safe at least and not play random shit. Okay? So I'll sell some there, may get a pullback. As we go through, I also like to sell some through high day. Right there. Seems kind of weird, kind of like, why would you do that? But I've explained why. Because when this fails, which it does a lot through high day, excess supply because they're dumping into it, back to low a day, okay? Especially when you get a high a day break and it quickly doesn't work. Low a day. So I have to take some off there, okay? Quickly. Quickly. Some. Sometimes all. This market, all of it. Me. And I may be wrong, and if the market tells me on Monday to change, then I change. But this market, in a crappy market, I don't even wait. There is where I'm out. All of it. Because in a really terrible market, it ain't even getting back to high day, and it's going to slam super hard through low day. Like we saw all throughout 2020, okay? So we get that, take profits. Single, lock in. Now if it does pull, I've made money. Right? Break-even trade, house money, psychology, super chill. You know, I've locked. I'm chilling. Depending on the markets, we can get that, right? Any sort of way. Same thing. Pre-market high, target number 2, take it off into it. Usually get pull there. Maybe we get more pull there, you know, high day holds, whatever, blah, 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 blah. Take profits here. Take profits here. That's for me. That's what my best trading looks exactly like that. Okay? And then if you get a big parabolic or something, profits, right? At a certain point, you're going to start breaking down levels. Who knows how patient I'm being? It's going to depend on the market. Sometimes my last sells are just over here. But it doesn't matter because I locked in the strength here. My risk is freaking here. Look. Okay, so we get an entry here. Here's my risk, right? Right? Here's my risk, whatever it may be. Reward you can visually see is worth it. And if I'm hitting my targets especially, even better, all right? Pre-market high, breakdown, whatever, and then it doesn't matter. When you get that, yeah, I'm selling here too. You know what I mean? If I'm long somehow. Does that make sense? That's generally the principle of how I like to sell. Into spiking, into strength, If these are like whole dollar levels, you know, that as well. If there are whole dollar levels in between, I'll watch those levels. Right? If that's a whole dollar level, you know, I may see pre-market highs, but I also may be kind of tentative because of that whole dollar level just beneath it. Little things like that. Does that make sense? Everything? That's my ideal trading. But the key to it is this. Are these cells? These cells? These are, you know, okay. I do it a lot. I don't know why. Well, I know why, but those are the keys. This area here, when you get into your odds, to have the discipline to take it when your impulses are like, it's gonna break, it's going up, you know, like, you have to work against yourself too. You have to like check yourself and your own noob, your inner noob. You have to like smack them again. Like, hey, the noobs are buying, buddy. Take some profits. If you can always be in that mind frame that the noobs are buying it, because here's my entry. That's what I love. Low a day risk. Here is, I mean, pretty much, I got too many scribbles, but high a day, right? Here's their entries. Okay? High day rate at pre-market highs, here's the noobs' entries. And here, this is their entries. These are fucking entries, guys. Do you understand? These are fucking entries. Contrarian. I'm serious. Everyone, that's their entries. Those are my exits. Why? That's where the shorts are fucking selling too. I don't want to deal with that. Have to fight that. I like to be in harmony. And that's why when these guys short high a day and it goes like this, all of those guys then become buyers at some point. You know what I mean? They all have to buy to cover. So you got to get totally in harmony with that. The more in harmony, this is my best trading. As my trading gets worse and worse, my circles and my little triangles on my charts start to switch places again. Does that make sense?
So I think what a lot of traders struggle with is flipping that switch.
Oh.
Sell into strength.
It's a really hard flip to
They're
switch.
still buying.
You can't fucking help it, yeah.
Yeah, they're following and they're buying.
And it doesn't fucking work long term. You may get lucky here and there, you know, a sweet bull market, like 20, you know, even in 2020, I was like, oh, these fucking people are making so much more money than me somehow. You know, and I've been doing this and I have process and these people are fucking just all in AMC. That was to me like, but I knew that most of those people will be gone at some point.
A lot of people struggle with the process. They're looking at a number.
They're looking at charts.
Dollar target.
They're trying to make this much, they're trying to make that much.
Trying to make a daily goal or something like that and not trusting in the process.
I'm trying to fucking hone process. I'm trying to perform. I'm trying to take my process that works, make it work better and better and better. And when it stops working, I gotta figure out why. And this is the beautiful part. I'm pretty much done with this process thing for the most part. The beautiful part is, it changes. Like I said, sometimes I ignore filings altogether, you know? But at the end of the day, it gives me some sort of level of conviction from a macro scale all the way down to my trade, right? Flipping the script, man, you know, flipping the script. When you look at the range on these things, just think about this. Just always like get yourself a low day and a high day here, whatever it is, and just look at the range. You know, not anything else, but what's the range of the stock from low to high? And if you look at that stock, where would you need to buy it to make money? Where would you need to buy it to make $3 to your dollar? Well, a third of the way up here. If this is it, right? Just on a very basic level. From a visual level. They actually have this on a lot of trading platforms. You can just literally throw up your risk reward. They have it on like TradingView and yeah, what's up?
So you talked about scaling out of your position. What for scaling in, defining your risk before you get it? Like obviously if it's closer to a major support level, daily, intradaily, whatever, it gives you more conviction. Or if the base is like what are the parameters, what are the indicators you look for bottoming action, or low of day potential, and then risk off of that? And do you scale in at all?
Yeah.
How often?
Pretty much.
do you scale?
How do
often
I
do you add?
arrive to my final position?
Right. How often do you add, or is it like one shot for the most part?
Mostly 1 to 2, because I am watching a low a day. You know what I mean? And most of the time, if I'm like gap and crop reversal, I'm just literally watching price action for a low of day. Sorry, hold on. And because of that, it's usually 1 buy, 2 buys. You know, whatever the math tells me, however many shares I can get, and then how far away is it, it's going to dictate that. You know what I mean? There are times where I'm starting in because I don't believe it's getting anywhere close to that level that I want it to. You know what I mean? And then it's a case of just do a little bit of math to make sure you're not oversizing too soon. That is my number 1 flaw when I size in, is my starter is too big. That, you know, oftentimes that will lead to some of my bigger losses because I wanted to start in on something, started in too big, and then when it got down to where I wanted to put it on, my risk was still too great. I couldn't get my average down enough. So I like to do the math ahead of time if I'm going to be doing that, and then make sure that I'm kind of sizing in less, unless it's telling me to size in more.
So
I'm serious. Unless the markets are like, yeah, we can start in. We're going to be a max size position, and we're going to start in, and this is what our max loss is going to be on this trade. And then what's the math if it gets all the way down to my risk? Where am I going to add to make sure that I maintain that risk?
What is
You know
your
what I mean?
motivation to size it in one shot? Like what is your?
I'm almost always 1 shot on gap and crop reversals.
Okay.
Almost. And because I'm playing off low a day, if it starts to work, this is kind of where the adding comes in for me. But if I hit a low a day and it starts to perk, and then I get like a higher low or something that gives me conviction and I can maintain risk, I'll put it on. That's usually the spot for me. I usually don't like to add. Obviously, I'm not going to do the inverse and add to my exact position into where I want to sell it. You know what I mean? So when I'm adding, it's usually because I've identified a low and then gotten like a higher low or a double bottom that gave me even more conviction to add and maintain the same level of risk. And oftentimes my first position, not my max risk anyways, I'm not going to get exactly the size I want to risk that 1,000. I may not get 10,000 shares, you know? But that was what I wanted, and I may end up with 6,000 shares. But I can add another 4,000 at the same price a couple minutes later with more conviction. That happens at times, and I'm still going to end up with that $1,000 risk. Yeah.
I guess you never average down because you buy.
Oh, I average down.
Yeah.
Yeah, just not too often.
Not too often.
Not too often. And if I do, it's just more, it's planned, and when it's not, I may just be in a position when y'all get in all the time, you know what I mean? Where it's just a trade that kind of got out of hand, and now I'm like, it happens to me too. But if nothing else, you can understand that the areas where most new traders are buying, I am selling for a reason. It checks my greed when I'm selling there too. When I sell, and I think that's kind of the sell through the high day thing for me. It feels good. It feels fucking good because it's new high day and that's where I used to buy. It feels so good to sell there. I'm like, you fucking idiots, you know? Like in my head, I'm like, something's like, but I sympathize because that's the only place I used to buy, right?
I think that's what a lot of traders are taught.
It's all we're taught, bro.
Once it breaks that day, you buy.
That's all we're fucking taught, and it's not only all we're taught. It's what we're wired to do.
Yeah.
It's what we're wired to do. Shit's going up. We're gonna get it in. It has to keep going up.
Look for that high day break, look for that pre-market.
That's it. That's all. That's strength. It's strong. It's squeezing. Fuck the shorts. No.
Yeah, exactly.
No. To me, that's. The big time short sellers are there, the institutional investors are there dumping shares. I'm there dumping my shares, hopefully, you know. And then you get over it, and this is just what I want over time my charts to look like. It's not always like this. My best trading does look like that though. You'll just see my little triangles as it goes higher and higher, because I don't know when it's gonna stop. You know, it may be a level on the daily that I can go back and identify if it ran somewhat recently or whatever else it was, you know? But, in a nutshell, any questions?
Well, I have a question, but I have kind of more of a comment because I do options.
Yeah.
So from the options perspective, I put in a small starter position. at a price that I want to buy that option at.
Yeah.
If that option starts running, I'll buy an option at the next strike price up. So I'm still getting the option at the same price I bought the other option at to run into that strike. And then, once I see that target I hit, I'll cut 50%.
Yeah.
I'm already in my profit zone.
Yeah.
I'll just let my runners ride.
Similar principles, man. Anyway, and all of this too is mitigating risk. And you know, the second I do that, I've mitigated my risk on that trade from whatever it is, 500, 1,000, 200 to 0 or just positive. And that alone just puts me in such a positive, not positive, but an and it gives me the ability to be objective about price action. I don't give a shit where it goes. I'm just trying to really figure out if it's going to go or not. Stick to my plan. Right? Read the tape. Do what I need to do. Okay? And that's pretty much it. Right? Trade complete. Day complete. All right, how did that work? Did that run? I might look for that again tomorrow. Right? Did that work? I might look for that shit again tomorrow. Right? Once I'm on the trail. That's how it works. That's why December I was like 100% gainer, 100% gainer, 200% gainer, 300% gainer, 100% gainer, over and over and over. I was just doing my little process. What's running? It was 20, 30 cent low float biotechs. Tiny little market cap biotechs with low floats trading at like 30 cents, 20 cents because the markets have been so beaten up over time they've just been forgotten about or diluted down. And a lot of them didn't have the volume to like build their float up even. You know, they're just like, so that's what December was, and that's why you saw me nailing, because I just kept doing it. What's up?
How far back do you look during chart history to review to help you pick your entry, your price? Is it within the last 24 hours or the most volume? Is it a daily chart? What do you like to look for?
Yeah, daily chart, any key levels on there. If it's a multi-day run, I go to 30-minute chart, 15-minute chart, 60-minute charts, running for a week. Map out my levels.
You look back.
Find the trend, huh?
Will you look back like a year, 2 years?
Yeah, the further back in time, the less weight.
Okay.
You know, if my theory on not liking to play recent big parabolic spikes is that they're going to be currently probably dilutive with a bunch of bag holders, well, the further back we go, like 3 years ago, are there still bag holders? Maybe, I guess, you know. But not the recent ones, you know, not the day traders and shit who have 2K and now it's just stuck in the bag. And they'll be eager to get their fucking money out of it, you know what I mean?
Well, I can ask you. Now probably you don't have this problem, maybe back in the days. For example, for myself, when I have a huge win, like right in the morning, you are overexcited and you tend to do mistakes after that. I don't know if it happened to you in the past. I have some difficulties to deal with this right now.
Yeah, that can happen. You know, that can happen. I don't really get too excited when I trade. You know, I try not to. Maybe if I'm live, I might give a hoot and holler for fun.
Probably because you
If I have some big wins and things start to work, I'll maybe a little tiger fist pump under the desk. But I'll try to keep it so I don't, you know, that's something you'll learn over time. And there's a lot of the best traders I know too.
So what is it? I mean, we know talk about all the things going wrong, but what is like when you actually like get it? And for most traders, when they finally like get it and they're like become consistently profitable, what is that like? It just
It's like a snowball. It's like the snowball effect, you know? It's like a little snowball you roll down the mountain at first, and it just kind of, you don't even notice it at first. It's just rolling, and then you're like, holy shit. That's what it was for me. I was just grinding every day. I was just studying with the charts, trading, learning new patterns, losing, winning, doing the whole process over and over and over again. Quest for knowledge, quest to try to figure out how the fuck to do this. I know people can do it. You know what I mean? That's what it was for me. And I don't really recall the minute where I was like, whoa, you know, necessarily. The account just kept growing. I just kept plugging away. I say this, for everyone there does come a time though. You know, for me, there were a couple trades back in the day and a couple sector moves that put me on the path. Like where I went, it's kind of easy. It's not easy. It's hard, but it's to go from 4 and get exponential to like 8 and then 10 to 20. That's yep.
When looking at.
No, I'm still answering.
Oh.
Yes, I'm still answering him. I think.
Oh, okay.
Yeah. Or no? Or the last question?
New question.
It doesn't matter. Yeah. Let's keep it going. Go ahead.
Okay. When you look at your entries for gap and crap reversal setups, and you have that first dip, and it creates that little micro channel, right? Are you trying to enter as close to the bottom as possible, or are you waiting for some sort of confirmation on the break of that initial channel, that little micro channel?
Which micro channel?
Like it's applies of the
Like when it comes down.
Yeah.
Right?
Gap and crap.
Open,
Okay.
you have your down.
Yep.
You have a little chop sideways
Yep.
for 10,
Potentially.
15 minutes,
Yep.
and then it pops.
Okay.
Out of that. Are
Uh-huh.
you trying to enter as low as possible to the lows, or are you waiting for that confirmation?
I'm always trying to get as low and tight to the lows as possible.
Okay.
Risk reward, baby. If I can get 1 penny risk with $1 upside, that's 1 to 100.
So in order to do that, you have to buy at the bid, because,
Not
right?
necessarily.
That's an update from your guide, because
That's-
you're waiting for the.
It's been years
So
since that guide.
you'll willingly kind of put yourself in the line of fire.
Oh, I am the line of fire, baby.
Yeah.
Yeah, I'm serious.
Yep.
If I can be and I deem it to be, it's not all the time. I like to see confirmation too. I like to see a little bit of strength first. I don't like to be the first to put the strength there. You know, I'm not trying to be the wall. If I'm that tight, it's because I already saw someone else there maybe, not me. You know what I mean? And I'll help build it with them.
So are you
Break by-
watching or do you have a limit buy setup?
Watching. I don't just throw
So
it
you're not
at
going
me.
to get steamrolled.
I don't like the idea of just getting, yes, I don't do that. I'm controlling that entry. So it is different, but it all depends. There are times where I really want to see confirmation because I'm sketched anyways. A lot of it will come down to conviction. Again, overall markets, the pattern, the closer I am to it, the more conviction I have. Yeah, I get free with it. I'm gonna put the shares out there I'll put some on the bid even. I'm gonna be there where I think low day is. I'm gonna cut if it doesn't work because I know my risk is so minimal. But if you're chasing that low 10, 15, 20 cents higher, and now you're, like I said, you're like 20 cents to highs and 20 cents to lows, that's random shit, guys. It's a chase.
50-50.
Yeah, you're
It's
in the middle.
50-50.
You don't know where it's going down. You're in the middle.
That's how I look at it. So I like to look at it. You know, I'm sure people have ways to make it more than just that. There are times where I'm watching price action and I can clearly see a higher low and it's not going back to high day, like low a day, and I get that. But I try to live in that lane where I'm just low a day, make sure I'm playing your lows, it doesn't matter what I'm playing, and ignoring the rest because I get chopped out. In between low and high a day, I get chopped out. Maybe you don't, I get chopped out. That's all that matters to me. I don't give a shit what happens to you. I know what happens to me, so I have to, you know what I mean? A lot of this may not work for you, what I do. Mathematically it does, fucking works, but it may not work for you. Not everyone, I think everyone can. I think probably you can. But if you just work on it, you know, just flip it around. This is the main theme of everything I've been trying to teach for a little while now, probably the last year. Is getting in harmony with low a day, high a day, pre-market highs. Understand that that is the fucking range you're using. All anyone sees is this, bro. When I was new, this is the only fucking thing that made sense to me. Is that besides like a morning spike like that made sense. Anywhere up in the morning spike was good. You know, cut right here. You know, cut right there. And then this. And then if that fucking didn't work in the morning, in the afternoon, you best believe when I saw it coming up here, these were my entries. I'm like, fucking hey. I'm out.
Yeah,
Right?
good. Oh, God, yeah.
So I mean, this is market psychology stuff in a nutshell. These stocks go up and down and sideways, right? Everyone's attracted to this, and to all the breaks of the highs. I'm telling you, you rewire yourself to both mornings. We had pretty much 2 stocks we were watching, and one spiked and one went down. On UNCY, it spiked and kept going, never came back below a day, whatever else, breakout, that's fine. I ignored it anyways. SI, I think was the other one. It had a little bounce to UAP. Off lows, it wasn't great. It's a shitty fundamentally from a macro standpoint, not a good stock to be in. You know what I mean? Huh?
Is it down below 2?
I don't know, probably, but I'm ignoring it, you know? And when the top 2 stocks I'm watching just don't work that day, then I don't work that day. I work on something else. That's it. That's it for that part. What time is it?
10 till.
10 till? 10 till 2?
Yeah.
Okay, so we're gonna switch gears one more time then. We're gonna do a last Q&A with people from home and you guys, all right? That's process in a nutshell though. Hopefully everything worked out and I'm either cutting here or I'm selling here, 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 and here. Or some combination. I'm either cutting here or I'm selling it all here in a shitty market, or here. I'm either cutting it all or I'm gonna sell half here and half into pre-market highs. You know what I mean? I just chop it up. I don't put too much pressure on myself. The more patient I wanna be, the less I break it into more fractions. I keep it really simple. So instead of buy here, sell here in 2 chunks or something, sometimes I'll not even sell into high a day. Sometimes I'll like wait and sell a 10 into pre-market highs if I have such conviction that we're just seeing, we're trying to maximize our trades. You know what I mean? So while this helps me maximize by selling always in the strength zone, when I know the markets are ripe and I'm in the right fucking place at the right time, my gut tells me, my conviction and my data and my trades tell me all that, yeah, I'm gonna size as a 10 there. I'm gonna try to at least. And then sometimes I'm wrong, it's like, and I'm like, fuck, I should have sold, but that's trading. You know what I mean? Can't help it. All I can help is my perspective, what I'm looking for throughout a day, and then I control where I'm putting my dots on the charts, my little triangles. That's what's important to me. Think about that. You know, you think about that. What does your chart look like at the end of the day? Where are your little green and red triangles, right? I guarantee you most traders who are, especially if you're going long and you're struggling, your green arrows are my red arrows, right? I'm selling to you when you are just figuring out that this is a trade to take, because there's the entry, right? It's fucking gonna go. And it's all of those spots. That is market psychology in those spots of new traders. And then there are shorts here. Shorts get squeezed out. There are a lot of, like, if I was short there, I get squeezed out through day. And when it goes like that, they're fucking putting it back on. Same as me. If I cut here and it comes back in, I can put it back on. Sometimes with more conviction. Yeah.
When your risk levels hit, do you get out as fast as possible, like a market out, or do you try to exit intelligently?
Nope. No intelligent, nothing.
Just immediately out. And how often do you sell all of your shares on that exit? Do you ever hold some for a rebuy?
No. I mean, I've toyed with all different kinds of ways. I've toyed with, you know, maybe, and I'll still do this at times. Take half off if I have to, you know. Mitigate risk. Mitigate risk. Take some off if I have to.
So do you do a market out just because the liquidity's there?
Depends on liquidity. If it's super liquid, yeah, if it's super liquid, sometimes if they're on a market out, I'll throw my sell 15 cents below the bid. And just be like, fuck it, I'll take out whoever's the next 5 people are, instead of just like, you know, it just depends. I use market orders a lot. I do a lot of things that I was taught not to do.
Not to do it.
I'm serious, or that I read to not do, because it works for me. It's tough. It can be tough, and especially when I'm selling into these levels and stuff. I'm like, fuck it, fuck you guys, sweet.
I mean, if it's a penny spread.
You use market orders?
I use market orders all the time.
You don't take a spread on the stock because it's
I don't care. Hey, people can hate on it all they want. Now when it's controlled action, yeah, of course I'm always trying to get filled on the bid, get a better price. But fuck, there's times where I'm putting my 20 cents over the ask. You know what I mean? It just, I would rather market order in on certain occasions, you know, when I have high conviction and stuff, than miss my entries at all and not being able to get in at all. You know? by fumbling around, like, you can have hotkeys and stuff. I don't really like using hotkeys personally because I fat finger too much shit. I have a bunch of kids who can fat finger things and whatever else. But, yeah. I do a lot of things because what I realized is everything I read in books and all that stuff just wasn't making me comfortable. So I don't just listen to sayings because everyone fucking says it. Everyone sucks at trading. You know, and these sayings are just like everyone says it together, and I understand a lot of them, there's so much truth to them. But do what works for you. Just because someone says don't buy a falling knife, I didn't dip buy for like 2 fucking years because of that. I'm serious. For, well, yeah, about a year, I was always buying strength. Because of that saying. So fuck sayings, figure out what works for you and what doesn't work for you, right? Yeah.
Next. Okay. So this one's a little unique. Would you be able to draw on the whiteboard a general timestamp from when you would take the entry to when you would take the profit?
No. I'll tell you, generally speaking,
Case by case.
yeah, it's case by case, but in general, yes, I can. I can tell you, in general, I am taking my position between 5 and 10 minutes into the open. And 15 minutes into the open, okay? 5 minutes into the open to 15 minutes into the open is kind of my golden spot for gap and crop reversal to the high day. When I'm talking about a really clean gap and crop reversal, 5 to 15 minutes, I like to see it set up. And then usually within the next 45 minutes, I need to see that thing pan out. If not, I'm maybe just stuck in consolidation, you know. Most of the time it works in less than 5 or 10. Most of the time it's like 5 to 10 minutes of downside, a couple minutes of upside, and then you're stuck between low day, high day again, unless you get to pre-market highs. So it's going to be market dependent. Yeah. So it just depends. It is important. It is a good question, actually. I mean, it is important. If I find myself holding these things longer and longer, like I said, I start to question myself. I start to question if this is ever going to go. I'm going to be stuck watching this all day. I don't want to watch it all day. In which case, what do? Most of the time, I'll set a stop. If I'm like, but fuck it, I do want to be in it because I do have conviction in it too. We'll be stuck. Let's just see if I'm going to, you know, let's let the trade plan work. But usually, I want to see that stuff work in the morning because if not, volume can dry up. You don't know. And if they're dilutive and volume dries up, it just does a lot of things, you know what I mean?
Do you use hard stops? And if not, what if it washes out too quick?
I do use hard stops. But when I am trading gap and crop reversal, I most of the time don't put it out there. I just feel like it's kind of like what stupid market makers coming for my stops and stuff like that.
Let's stop with
There's a little truth to it. I don't ever blame them on it. You know, it's your fault for setting your stop where they're triggering everyone else's stops, whatever. It happens. It happens where I'm watching it and it just fucking cracks hard. It happens. But the first thing I'll say is it generally happens here and here and here and here and here and here. In my experience, when I'm trading a stock that gapped up 30% and is now only 15% up, downside's not that bad. I'm gonna have like red-green down here, you know what I mean? I have profitable shorts who are gonna have to cover supply and demand. Second they all short support or resistance, they become buyers, you know what I mean? So, what do I do when this happens? I cut it intelligently. I'm serious. Does that make sense?
Yeah.
I am 100% trying to be disciplined and not be intelligent about this at all. But once it does that, I try to be somewhat intelligent. Main move for me is if it says this, I'm going to fucking get it off. I don't wait for it to come all the way back. I'm not waiting for it to go do anything fucking crazy. My theory is wrong. It hard cracked. You know, it's not like a bear trap where it's a little. You can see so many scribbles. But you guys know what I'm trying to say, right?
Yeah.
that usually happens when that support level coincides with like pre-market.
Oh yeah, and dude, or if it's just super extended pre-market, you know, and that's why that's why I love this setup, man. That's why I love this setup is if it were to crack like it would any other part of the chart, it would have to go red. There were gonna be, you know, there's a lot of. I don't remember the last time I played gap and crap reversal and was like got fucked from it. I'm serious. I don't remember the last time where I played it, you know, and I had such a big pool like that. It's very rare, you know, and then especially once it spikes, man, you know, you're at low a day still, and you guys see the charts. They go to high a day, and then they go back to all the way where low a day, and then back to high a day. And then maybe later in the day they'll do something, but yeah.
Question.
Yeah.
So even now, like, do you put minimum orders just slightly above?
You guys are obsessed with limit orders, bro.
Do you put minimum orders above the current price, or do you put a limit order and let it sit, waiting for the price to come to you?
Yeah. Again, case by case, but I with this setup, I need to be in control of it, so I would rather kind of like not have it just sitting on the bid most of the time. You know what I mean?
Okay.
There are times I'll set conditional orders, like literally just set a conditional order to buy and set a stop for me simultaneously.
Yeah.
That's kind of rare. I don't do that too often. I do that if I'm scared of that exact thing though, of like if I buy and it immediately gets, you know, gets beat up. So yeah, you know, big crack. Like I said earlier, I'd get into cut intelligent mode, not complete panic mode. But I find there's not too much of a difference most of the time when you're stuck in something like that. Maybe wait for a bounce, you know? It'll be case by case. My MO is generally speaking, get a little bounce because you'll still have shorts covering and stuff like that and dip buyers and yeah. Yep.
How do you recognize the market is hot again? What do you use as your gauge?
Scan. Really basic. My scan tells me at the end of the day, if there are 100, there are 200, 2, 3, 4, 5, 6, you know, big runners, 100% gainers, 50% gainers, like stocks going from 10 to 15 to 20 even, high price stocks, low price stocks, whatever it is. My scan will tell me, and that's kind of what I was going over before. You know, I don't have to guess, I don't have to do anything other than wait. I don't have to do anything other than size down and wait when markets get sucky. Yeah.
Do you ever adjust your plan based on price action, where it either hits your target or it hits your loss?
Do I ever adjust my plan based on price action? I do. Yeah, that's a good question.
That's a great question.
I try not to. You know, I try, for the most part, to stick to my plan, okay? The only time that happens is if I do see something in the price action that really freaks me out. What's that? Yeah. Unless I see something in the price action that really freaks me out, you know? And I find even then, it's hit or miss whether or not, you know, a lot of those times I kick myself. I'm like, fuck, you should have stuck to your risk, bro, you know? So I do like to frame my trades to the point where it's not really a question of what I'm doing, you know? I have a plan, try to stick to the plan. Yeah, I don't ignore price action, but I try to let my plan work or not work. I don't try to just sell arbitrarily for no reason. You know what I mean? Just because I'm up 5% or anything like that. I sell because it's approaching high day again, or it's approaching the level that I said I want to sell some at, or it's making new highs again, which is another level, and then I'll pull back and set new levels. And that's all I'm doing, you know? With profit taking, so I get my gap and crap reversal, right? There's your low a day, here's like my entry, and we get all that, and there's high day, blah, blah, blah. You know? Then it's a matter of just placing my little triangles in the right spots as it's into strength. When it's spiking, and you can do this. You can probably do this for yourself. If you try this setup, get your good risk, get your entry. When you get excited, start selling some. Like excited, like where you used to be, where you're going to be buying it. You know what I mean? You know where new people get excited, and a lot of you probably still get super excited in some of these areas. I still get fucking excited in these areas sometimes. You know what I mean? I still get excited because it's wired into me. I've rewired the shit, but it's always trying to creep its way back in. Like, oh, you know, it just is what it is. That's all it is, man. And as these charts go, at the moment, if I can hodl real well, if I can like have good conviction, I am just setting up levels as we go throughout the 15, 30-minute chart. And then it'll pull back, and then when it goes through this, I try to sell some and sell some and sell some. And then it's gonna pull back, and I just try to do that as long as I can fucking stand it, you know what I mean?
Do you usually look at the chart and see where there's accumulation and distribution?
Not really. Keep it simple. I'm watching volume. I know where volume is, you know? I don't really look at anything like accumulation, distribution, and I don't use indicators outside of VWAP. That's all I really use. What my formula is find the next fucking runner, beat everyone to it, get good risk reward doing it. That's my game. And that's what I do every day. And because of that, I get better and better and better, you know? Except for when I'm not good, which happens. Being human, yeah.
This one might open up with small can of worms.
Huh.
So you use the grab and crap reversal setup in the mornings. What strategies do you use in the afternoon?
We went over that yesterday. I would definitely watch that one if you haven't watched that. I don't know if it's available. I'll make it listed on the site and on YouTube. It's this principle, okay? So day 2, for example, I'm still playing gap and crap reversal. That's my ideal day 2 pattern. My ideal day 2 pattern. So this day 1's action. All right. So here's day 1. Pull back, right? Here's like after hours, and here's day 2, right? I'm still looking for it. You know, I'm still looking for gap and crap. Let's see, it gaps up day 2 even. All right. So it gaps up day 2. I'm still looking for the same thing. Say this is open, I am still looking for the exact same thing. I just have previous levels that may work for me. All right. It may be previous highs or previous support that I'm watching on the gap and crap. You know, it may be previous highs. This is yesterday and this is today. Gap, crap. That may be, like we saw in UNCY today. It had a former breakout level. You know, it was like over here. This is kind of the daily. Pre-market highs. It actually broke out pre-market, pulled back, kind of held, and then started doing this shit again. You know what I mean? So day 2, I'm still playing gap and crap reversal if possible. I just have key levels from the day before now to work off of, so it can be pretty nice on day 2. But I also know it's day 2. So I keep that in mind. I have to mitigate risk because now we're getting into day 2 or 3, where I am expecting for it to fail on one of those days.
Is it like a singles mentality on day 2, or?
Setup by setup, man. You know what I mean? But generally speaking, yeah, more singles mentality day 2 and day 3 for sure. You know, as we just get more and more extended to the upside, and there's more and more chance in this. Fat cracks. Does that make sense?
Yeah.
So there's a day 2. If it's a breakout, say this is a breakout. This is a breakout level. That breaks out. Still playing the dip. And I'm still having risk reward. You know, if I'm going to be using this level, I got to risk accordingly. So my entry is here somewhere, which means it's not here and here and here and here and here and here and here. Does that make sense? Risk reward wise? Okay. Yeah.
How far into the day would you consider the gap and crap reversal strategy still valid?
Depends. Bigger float, slower moving float, it can happen on a 5 or 15 minute time frame too. You know? For what I like, it's a morning thing. Where's the morning? This would be the morning. whatever. It's a morning pattern for me. Again, if it hasn't panned out in like an hour, I find myself doubting it.
That's actually part of the question. This first hour, so if it's,
Again,
if it's after
yep.
an hour.
I find myself doubting it, you know? And it's not that it's not necessarily gonna work, you know? There are times where that's the pattern. It's like morning consolidation and 10:30 a.m. spikes an hour later, you know? So it's all gonna be market dependent still. Time of day, what's running, is it 10, is it 11? I'm seeing everything just consolidate all morning and then squeeze. You're like, all right, be chill this morning and maybe hang around. And when that stops, I stop doing it, you know? That's why I said all those things before are more important than any of this stuff. Outside of buy weaknesses, don't buy fucking high day and high day and high day. Unless you want to, you know? You can do whatever you want. What else?
Do you set stop loss immediately after entering your trade, or do you wait until your mental stop loss is hit?
I watch it, wait. Second I buy on a gap and crop reversal, I open my sell. I don't set a stop most of the time. I literally will open a market sell order. I will do that. Depending on the scenario. Sometimes it's a limit order, 5 cents below bid, where I know I'm gonna get filled no matter what. I'll be looking at the tape in the level 2 as well and see who's on the bid and if there's anything that I could use to panic out of or get out of without affecting the stock. Yeah.
What's your take on folks who will get into stock, like for gap reversal, and they get out before the loss? So they're trying to stay great.
Hold on, just doing that instead of letting risk be breached?
Right.
I do it sometimes, you know. I would rather stick to my plan. If I have like 1 to 5 risk reward conviction in a trade, I'm gonna risk, let's say use smaller numbers, let's say like $100 to make $500. I would rather lose the $100 than make $10. That's personally me. I want the trade plan to go. This is the point. And I know I'm gonna lose that 100. I could lose the 100 tomorrow. I could lose the 100 the next day. But the next day I'll be up 200 because I'll make the 500. You know what I mean? And the next day if I hit it again, I'll be up 700. You know what I mean? And then it compounds like that with good risk reward over time. Do I do it? I totally do it sometimes. Almost always regret it. Almost. Like I said, I would rather lose my $100 than lock in my $5 only to see the $500 I was supposed to make come to fruition because and all I had to do was hold another couple minutes because I wasn't breached. You know what I mean? That to me is more damaging psychologically than the $100 loss. Than if I'm just not following my plan and then see my plan work. Of course, if you don't follow your plan and it cracks, you're like, oh, I'm a genius, you know? Great reading of price action. And that happens to me sometimes. You know, I'm like, oh, I knew it. I saw that guy that was soaking. Guy was soaking for sure, bro. What market make you think it is, dog? Definitely. I don't know. Anyways, that happens to me. I say it all the time that I would much rather just, most of the time, let the trade work or not work. I'd rather make the 500 or lose the 500 than make $10, which is meaningless to me. You know what I mean? And then what does that do to my data? I don't know. Yeah.
You ever found gap reversal to be effective on OTCs?
I never played it. But I mean, yeah, I did panic dip buys. You know, panic dip buys work. OTCs are just kind of moot right now. They kind of suck for the last year and a half or whatever, 2 years. What else, guys?
Let's see.
We're just straight Q&A right now for the next, let's see here. We're just straight Q&A for another 15 minutes, and then we're going to wrap up the stream for the day. And just the people who are live with me will spend 30 minutes together or 20 minutes together. I'll give everyone a back rub. Alan gets a foot rub.
How do you size your position if you're buying at low of day, and where would you put your stop to calculate your position size?
Stops a low day. And then it just depends. How far am I from low day? What's my risk? That will determine how many shares I get. Very basic math. As long as I keep that ratio nice, I'm not chasing. It's just how many shares I can get to get said risk. That's it. If it's 10 cents from risk, 10,000 shares, $1,000 for me. I always think that's my baseline. Unless markets get shittier, like I said, then I'll bring it down. That's all. How many shares can I get? Where's my risk? Is it good? Is it the juice worth the squeeze? You know, and more. But yeah.
Does it always have to dump out of the open first? What if it spikes to pre-market highs first and then comes down and creates a low day?
Don't like it as much. Okay? It goes back to that principle that now we have a bunch of longs trapped. Okay? If it morning spikes, we have a bunch of longs trapped. That's what happens. You know why? Because that was me, and I used to get trapped there. Morning spikes. So I like to look at it like that. If it morning spikes, especially these days, the only entry I'm still going to use is low day still, these days, most of the time. This is just as a rule of thumb. Yeah, that's it.
Is that because of the volume?
What's
like
that?
The pre-market volume is not, it's like, for example, if market hour higher day is higher than pre-market higher day, for example. So because of the volume, significantly lower. Higher volume during market hours, bag longs are more meaningful.
Yeah. Exactly, because there's a shit ton of them when you get a ton of volume. And that's the key. You get that morning spike. Yeah, it's sorry. I don't like morning spikes. It traps longs. You know, it just does. If you get morning spikes and people get trapped, and then like I said, when we get back up towards those highs, I'm less likely for them to break, you know, in my opinion, from a supply-demand standpoint. Yeah.
Do your scanning settings ever change midday, and if so, how often?
Throughout the day, I decrease volume throughout the day. Let me just see. All I'll do, generally speaking, is I'll narrow it down by price. Like I said, if I know it's like 20-cent stocks running, I'll cap it at $1. And then the only other thing I really do with this is I can change the percent change. Sometimes I'll take that all the way off so I can see percent losers. And dollar volume. Dollar volume is the main one. It's liquidity. I can just narrow down the stocks that are trading a lot of volume, and that'll leave me with the most tradable stocks usually. Okay? So I don't really recommend my settings if you're brand new. Honestly, it might be too much for you at the time. You may be seeing too much stuff, you know? But I know, the way I trade, I know that a lot of tickers you won't see until they've already gone, and I've already been in and out of them technically, you know, at times. If your volume requirements are way too high, that's all. So pretty much the way I explain it, you want to cast a larger net, see more stocks, more liquid stocks, bring your dollar volume or your volume requirements down, way down. You want to narrow it down to the most liquid, tradable stocks, increase your parameters. You know what I mean? It's a personal thing. Scanning is personal to you. I don't think it necessarily, like I said, would work for everyone, and maybe way too many stocks for you to see. But it works really well for me, especially how I like to do it. I'm looking for patterns. I'm looking for a bunch of Chinese stocks to pop up in low volume. That's a pattern to me. I'm like, oh shit, what's going on in China? Let's Google it. Oh shit, they got some going on the markets. Let's check out some Chinese penny stocks and maybe scalp something.
How do you know when to really size up?
Good setups, tracking your trades, experience, seeing the things over and over and over again, trading setups over and over and over again. The markets, for me, it's more, you know, things kind of can align at times. And during those times, it can be gut, it might be data for you that tells you that that's what it is. Usually it's a combination of both. That's what it comes down to. And then it comes down to my results. It comes down to my results, you know what I mean? When I'm pressing it, everything's working, I press harder and harder and harder until it stops, and I yank the emergency brake to make sure that I don't slide and keep fucking making money and not giving too much back. Yeah.
Do you think OTCs have been so bad since January of, it says 22, it's 21, because of the overall market, and do you think they'll ever come back once the overall market comes back?
I think it's more to that. They did some regulation and stuff. I can't even buy some of those stocks I used to trade back in the day. You know? So that's what I think. I think that there's that. I'm sure we'll have some OTC runs. Nothing goes away forever for the most part. And there's still OTCs. People still trade them. There's some people still who have only traded OTCs like since the run like years ago. I don't know how, because there's been none. But I would love for OTCs to come back at some point. I'm sure we'll see it. But who knows? It may take another year or 2 years or 3 years or I don't know. Yeah.
This is another OTC question. How do you tell when OTCs are hot again?
Because on my scan, there will be a bunch of pink. Oh, they're actually looking at my scan right now. Nice. On my scan, there will be a bunch of pink tickers here. Okay? Listen, guys, how I find anything, it's the same. I go to my scan. On that scan, there will be a bunch of pink tickers. Pink stands for OTC, okay, on my scanning software. And I will look, and they will all be up hundreds of percentages, okay? And they will have volume.
That's what you want to see.
They will have volume. That's the one thing that they just don't fucking have, so I can't trade them really. Liquid OTC penny stocks. They will have volume. That is when I will know personally that they're hot, because I will see volume and runners. The same way I know anything's hot. Same way I know biotechs are hot, because of volume and runners. Yeah.
Do you ever add back shares after taking a partial profit, aka trading around corn?
Would you like to take this one? Yeah, I do. I do. But not that often. I mean, I'm not the best at that. You know, when I start adding higher, my averages get messed up. The risk reward that I originally had, now I've got weird different numbers going on. And what would have been, you know, what I'm trying to say is oftentimes, because of how the dynamics of how this works, if I'm adding up here, well, I was really just still supposed to be selling up there. I don't know if that makes sense. I would oftentimes be better off not adding up there and just putting the rest of my little red triangles up there instead. For me. Because what happens is I will add, and then if it pulls, I still have a good average and stuff, and then now I'm like losing on the shares I just added. So many times I end up taking off the rest of that position for break even and losing on whatever shares I added. So many times. If I get better at it, there are a lot of times it doesn't happen too. But for me, my average gets screwy. You know, my little brackets that I like knowing that that's my risk and my reward is this. And as I add, now this little line starts pushing up, and I still am thinking low a day, so like where it's gonna eventually go. So the only way to make up for that is to move risk higher. The other thing I will do in that scenario that works a little better for me is to try to forget the position I have. And if I'm gonna add, trade that new position, find risk on that new position, and then take that shit off if it just doesn't work. So I'm just kind of mitigating that in case, and I'm not giving it all back. That's the other adjustment I personally will make is to add like it's a new position with fresh risk, and make sure that I take off my ads when that doesn't work. So I lose a minimal amount of my ads, and still am left once I sell those with my original average that I can still make money on. You know what I mean? Little things like that.
Doesn't LIFO, whatever, last in first out, take care of that?
Yeah.
So,
I do. That's all I'll do. Last in, first out.
Yeah, if you scale at all.
I'm just saying I have to frame it in my mind that it's not just one position anymore. That's it for me to be really comfortable. The ones that I've done better on, that's how I've looked at it. You know, it may be the same goddamn thing, but it's how I look at it that helps for me. You know, a lot of the stuff is how you look at it. You know, that then transfers to your brain, and then you do your little thing. Twist it all up into weird shit. You know, yeah. It's a good question though.
You have any ideas or advice on journaling trades? I'm currently taking a screenshot of the chart and pasting it in a Word document.
Yeah. Psychology. You know what I mean? Psychology. In terms of tracking, those were the two purposes. I had two main purposes: refining my setups. Okay. More importantly for me, defining setups, like putting names on things that I thought were random, but then I would see repeat. Those are patterns. Something repeats, it's a pattern. I would see things repeat. They're not patterns I was taught. There's no name for it. The only patterns that have names are like dip buy, breakout buy. You can buy a breakout or dip buy. Those are like pretty much the strategies, right? So every other thing, if I saw something recurring, reverse splits, you know, that was through tracking. That's how I figured that strategy out, was through tracking, you know? The big part about that was journaling for me. My tracking page for my setups was also my journal. I didn't have a separate journal where I just wrote. I had a column in my spreadsheet where I would write out the psychology of the trade. What was in my control? Specifically, I had a column for this. I call it my psychological defects column, okay? That's a little leftover from my 8 days in AA. First step is to admit you have a problem. All right. My psychological defects, okay, or my emotional defects, you could call them, which were basically, did I fall prey to, was the question. And then I would write either FOMO, double dipping, I'd put 2 B's. This is a problem I had where I buy it, I get good risk reward, I buy it, and I buy it here as well when it started going higher, and end up with inverse risk reward. It's kind of what was happening. I didn't know. I'd buy it, I'd make money, I'd buy it again, lose money. That was happening, leading. So I dubbed that double dipping, FOMO, revenge trading. Okay, I had a column specifically for that. So I could take that, weigh it against the setup and say, okay, but I fucked that up. You know, whether or not the setup worked, this is what I did wrong. And then I would have another column where I would just explain it. You know, chasing, did I chase? I actually had a column just for chasing, yes or no. And honestly, if I went back, I should find it. If I went back and look at the entries, I'd probably, so many times I said no, I guarantee you, now I'd be like, that's a fucking chase if I've ever seen one. You know what I mean? Like, I don't know what you're thinking. Well, I do. I didn't know shit. Okay? That was the main thing. This, tracking the setups. And when I would track setups, main things that were important are like time of day, sector, all the shit that we break the thing down into. Anything that I can use to break down the stock. Fundies, the fundamentals, right? Was it dilutive? Did I trade it? Where were the warrants? Stuff like that. That was the key to me. So I was able to start honing in on my setup, see which ones worked for me, which one didn't, what time of day. By tracking, I eliminated midday from my trading. After I had gotten a little bit of data, it's like half of my losses were midday during that period of time of my trading. I'm like, oh shit, I cut out midday trading, I cut out half of my losses. That's a big number, that's a huge stat to know. So just little things like that. I know there are people who track way more than me. I know there are people who backtest a bunch of shit. For me, the backtesting doesn't tell the story. I've done a lot of backtesting. I did it on E-Trade back in the day, I backtested everything, all these different parameters and doing all these things. And for me, the speed in which the cycles of small cap and like how the runners come and go, it's too fast to backtrack. The backtracking doesn't take in context all the macro stuff happening in the world, what patterns are working at the time. You know what I mean? You could backtest like breakouts and it will give you data, but any breakout on any given day, if you're not, you know, in a given market, not gonna work.
You can't backtest anomalies.
Yeah, it's tough. You can't backtest emotion. You can't backtest what we do. What I do, I think. I'm gonna try. I'm gonna try working with data a little bit more. I don't know, Duck's gonna be here, right? A few days? Tomorrow? Maybe I'll ask him. They're like, Ducks, let's give me some long data, dog. No, but yeah. That's the main part of tracking for me. Figure out my own setups, which one work, which one don't. Figure out if it's user error, that was the other thing. User error. I wanted to know if it was user error or not. Like, did I fuck the trade up? You know? And how? So what psychologically, how was I fucked? And then in real life, with my execution, how was I fucked? And just to always keep reminding myself and try to not do that tomorrow. You know? If I have a bunch of trades that are just saying chase, 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 I'm like, fuck, dude. At a certain point, you're like, you have to ask yourself, am I chasing? So like, that was the key to this, is that it put me on a path where I have to think about it if I'm even chasing in the first place at the end of the trade. Not just trade, it's done. Oh, fuck the market makers, man. You know, fuck the shorts. Oh, fucking shorts. No, it's more like, where am I fucked up? What works for me, you know? Over time, these things were not completely eliminated, but like, I wasn't putting them up as much. This fucking one I didn't do for like a year and a half. I couldn't buy and then rebuy. I had to like retrain myself to be okay rebuying when I still have conviction in a setup. I still have to do that, you know? So, good question.
Okay, last question.
Last question.
We are also almost out of time, but this one's straight from Yemeni.
Hymns.
So, can you please explain how you tend to re-enter a stock while making sure it's not a revenge trade?
Problem with revenge trading, you don't really know until like you're doing it, you know, and you're like 2 or 3 trades into it. That's the problem for me with revenge trading. I'm not a robot, so I can't be like, oh, I lost that, and then I'm gonna trade, but is this a revenge trade? Like, I know you just kind of trade, and then usually you're 2 or 3 in. That's usually my sign. It's like, fuck, like a couple losses. You're going, and then for me, it becomes a matter of control. The second I get out of this risk-reward idea, really controlled, my setup, my entries, very controlled trades, comes always off the back of a loss, you know? Usually a weird loss. Maybe you're up a lot and then you're down and then you're like, get all mentally fucked. And most of the time revenge trading comes from trying to make money back that's no longer yours in the first place, you know? That's really what it comes down to. So I do try, if I take a loss in the morning, to not even think about how much or, you know, whatever just happened, and I keep trading. You know, I try at my best to never be trading my P&L. You know, I'm not trying to get green on it. I don't give a fuck if I'm green on the day. I do. I want to make money. But you know what I mean? That's not the be-all, end-all for me. It's just not. So in other words, when I lose a couple trades in the morning, the thought is not, I don't look at that number and say this is a number that matters, because it doesn't. If there's another trade, I try to take it. You know?
I
But
would say a revenge trade is just something made straight based on emotion.
it's emotion, exactly. And you will know, because there will be no risk reward.
No,
You know,
just trying to make that money back.
there will be no risk reward, and you will start. And for me, I start putting my green triangles in these weird places again that I'm not supposed to. That's how I know. If I'm like buying high day for some reason, I already took a loss, like maybe buying the dip in the morning, that makes no fucking sense to me. That's not what I do, you know? But like anyone, I can fall prey to it, you know? And then to me, it's a matter of fucking, I'm not gonna shut your computer down, but close it up. Turn the shit off. You know what I mean? Stop the bleeding. Come back of sound mind. Realize that, oh, I was just on tilt. I was just revenge trading right now. I lost a little bit more than I should have. But if I keep fucking going, I'm gonna lose a lot today. Shut it down. That's what I do. Shut it down. Right? I don't revenge trade too often. It's a very specific mode. My biggest revenge trade come from not even big losses, usually from being up a lot and then being down. Like when that happens to me, I hate that. If I don't lock. When I'm not locking, where I'm supposed to into strength, I fuck myself up. That's why I can do that too, because I know if I'm up like 10 G's and then I'm up $500, I'm like, you know, like I don't want to cut this. I'll turn into a little bit stubborn baby. You know what I mean?
Yeah.
So.
That's why you just gotta shut it down and walk away.
Yep. Cool, guys. I think that's it. Anything else? I think we're good, man. Cool. Any questions here? Any questions for you guys while we're still here? We got a little bit of time left. I'm not going anywhere.
I just wanna know how many people started trading in 2020 of everybody that.
So many.
Because that was probably the
I started in commission week 1, actually.
And I'll tell you why, it's because they make it so easy for you to make money.
Let me tell you one.
They make it so easy for you to make money during that time. You can chase and still
We
make
don't look
money,
at everything.
Oh, yeah, no doubt.
you know? And then 2022 came about, and everybody took a shit. Why? Because there was no more free money.
You've met people that lost everything.
Average. Just the six-figure traders.
Oh, yeah.
Lose everything.
Oh, yeah, I know. They thought they knew everything.
But they made it so easy.
Well, like I started in October 2020, I made $5,000 the first month.
Yeah, see,
With first time ever on a Robinhood account doing market research.
yeah, exactly. Because
I
everything's going
was
up.
like, oh, easy. I think it worked.
This is easy, right? Yeah, exactly.
Anything else, guys? Anything? I saw a question earlier about dealing. I saw a question earlier about being a parent and a trader, and I wanted to address that. It's hard as hell, you know. When you have kids, most of these young whippersnappers out here don't have kids. And why? It's way different, man. You know, risk is different. Everything's different. I can't afford to blow up all my money. Can't do it. And I mean, build back, okay. But that's not, you know, with 4 kids, I'm the dad, I'm the breadwinner, I'm the man. I started learning when my kids were little. You know, my oldest son was only 2 at the time, and I had a baby on the way. So I had 1 baby on the way is when I started learning. And I told my wife this early on, I'm gonna learn this right now while they're little, so I don't have to miss baseball games when they're older. That's literally what I told her. I want to spend I want to grind as hard as I fucking can while they don't remember. You know what I mean? That was the goal for me. And what I did was maximize my time, always. Earpods in at work, because I was able to. Earpods in, listening to people, listening to podcasts, you know, YouTube, whatever it is. Chat with Traders, you know, was a big podcast I would just listen to every single day. Every time I drove, it was trading. There was no music. I didn't listen to music for the whole year, pretty much. I didn't watch Netflix for the whole year. I didn't play video games for the whole year. I had no friends. I didn't go to the bathroom. I didn't. I'll find the video of me back from end of 2017, and you will see a shell of a man, a skeleton, with eyes sunken into the back of his fucking skull from staring at a computer for the last however many, probably at that time probably 3 days straight, and then like for 6 months at that point. So I did that when they were really little. I knew I could do that. Now it's different. I don't have to put those kind of hours in. I still have to work. But that was my goal, and that's my advice. Is you got little ones, they don't remember shit. You better grind away. Yes, you're sacrificing your memories of your little one. My daughter, man, I feel like I missed her first year of life. It's weird. You know, I feel still like that. But my new daughter, I'm with her every fucking day, all day. You know? So close to her. So that's what it's about. You know, you don't want to sacrifice the well-being of your family. I didn't, or my wife, or my relationship with my wife or kids. So for me, it was work. Make sure I spend at least 1 hour a day with them. Dedicated daddy time, no charts, no nothing. And that seemed to be good enough at the time to allow me to do everything else I needed to do. So with anything else, we waste so much fucking time, you know, in a day. I guarantee you could go through your day and find the places where you were just sitting on Soch or something else, and then, you know, that's the idea, is that we maximize our time. It doesn't matter if you have kids or not, you know? You want to get it quickly, you got to put in more work. And that doesn't necessarily guarantee success in this game, obviously. But it does guarantee that tomorrow you'll be ahead of where you were today in terms of your knowledge. And you don't know where the knowledge, your experience, the patterns, and the stars align, and it's your time to fucking shine, and your time to go from 4 to 10 to 20 in a span of a couple weeks, because you know when to press it. You've been waiting for this moment. And it's hard to explain, man. I've been saying this all along, and it keeps coming true one after another. You don't know when in your journey that point comes. It comes back to what you were saying earlier about, you know,
You get it?
the snowballing effect. You just don't know when that time comes. And all we can do is work as hard as we fucking can to make that time come faster for us. We can't force it. We can't force the markets. You know, if you were like started in 2022, that sucks, bro. But it's also, in my opinion, better than if you started in 2020 and then lost everything and you're back at your job.
Imagine all those people who became very successful quit their jobs.
Oh, they all quit, bro. Everyone fucking quit.
And then all of a sudden, like 2022, surprise, you suck. And
Guess what? They're all getting jobs again. They've been getting jobs.
I can imagine like doing it. I will have to go through that.
Do you remember your aha moment that
No.
you just
No, there was a point where it was 3 months consecutive making more than the law firm that I was working at. I was making more than the entire like law firm payroll, like how much the law firm was bringing in. Their gross, not even their net. Like I was 3 months of that. It wasn't a huge firm, but I was like, holy shit. You know, I was a law clerk. I was like a paralegal basically, an assistant, you know? And that assistant from a computer in that office was making more than the office for 3 months. And I was like, okay, maybe I'm good at this.
Can I ask you, like, I've experienced periods of consistency, and then I'll have like a horrible trade.
Yeah.
It's happened to me a couple of times. Like, well, I've never had periods of consistency before, so I'm guessing I'm on the right track. Because like, out. So what I've been doing now is just like size down, and I'm just like extra careful. Is that pretty much what I need to do, right?
Yeah, dude, that's great. It sounds terrible. I know it's shitty, but if you've never experienced consistent profitability at all, okay, so that's fucking great, bro. This is what we want. And this is a very natural cycle, okay? Very natural. Happened to me, still happens to me. Profitability, give a bunch away. That's what happens the first time you get profitable, because you're pushing and you have all the success and you're confident. But that moment where you're supposed to lay off of it, you don't, and you just keep going. That is the game, bro, is taking that time, because we're never always consistently profitable, you know what I mean? But when we are, and we're growing our account, taking the time between when we're hot and cold and making it get smaller so we're not losing big. That the recognition that the pattern is gone or the markets have shifted,
It's a skill.
that is a skill that comes with experience by going through that cycle for yourself multiple times, over and over. That's how it was for me, man. It was like profitability, once I got to it, sweet. And then, you know, 2 steps forward, 3 steps back. I'm like, okay, that sucks, you know, let's reset. 2 steps forward, 2.5 steps back the next time. You know, okay, I stopped the slide a little bit quicker. I'm serious. Next thing you know, 5 steps forward, 2 steps back. You know what I mean? And you get into this rhythm of like, good trading, okay, bad trading, pull back. Good, I'm serious, man. It's frustrating, but it's beautiful. You know, it's not easy, but it's doable. It's all these things, man. It's just a matter of that, of understanding your cycle of your profitability and then your drawdowns.
I think it's a matter of becoming overconfident. For example,
Oh,
like,
100%.
Like, ignoring my risk when I trade.
Uh-huh.
Because I'm overconfident because like I've done this perfectly fine so many times. I got this. No. And then like I do the one trade, my
Yeah.
risk gets breached,
Yep.
and then I just hold on. And next thing you know, like I just lost all of like February's profits. You know, like just like that.
And that sucks, man. But it's great. That's what I'm trying to say. You know what I mean? It's a good thing. If you're not hitting any consistent profitability, yeah, maybe it's comfortable because you just suck all the time. You know, I'm serious. We get comfortable. Like we'll just be comfortable doing the same fucking thing, even if it's losing every day. That's how we are as humans.
I just saw like last year I ended $3,800 red on the year.
Gotcha.
Okay, on my account. And then starting this year, I was like, I really don't want to finish like the year red. I so do not want to finish it. That's like my priority. I think in December 31st, I don't care if I'm green by $1. but I want to finish the year great. Like that's my.
I got you, brother. Nope, it's just a matter of of getting that time between the slide on the back of a good confident run down, and the recognition. It comes with time. Next time you'll know too. Because here's the thing: first step to be conscious that this is a fucking thing that happens. You know, if you've not experienced profitability, you've not experienced the backside of what profitability looks like. Good runs, right? Biggest losses come off of our biggest confidence because we have our biggest size.
Yeah, exactly.
That's fine, but just make sure that loss is under control when that one comes. And then when that one comes, what I do, size down, step back, close, shut down, do whatever I have to do. I'm serious.
No, I agree.
To stop. And then if I come back tomorrow, if setup's still there, okay, back to the well. Still water in the well, you know what I mean? But I like to err always to the side of, all right, pull back. I don't even know if it's time yet, but just be careful. We have to wrap up the stream. Yeah, stream's done. Everyone who joined us, thank you so much. We'll catch you guys in chat. There's links everywhere for everywhere. There's coupon codes everywhere. Love to work with you guys. But in the meantime, it was really great streaming for y'all. Have a blessed weekend. Fuck breakouts. Let's go.